Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Lachauskas. Today's the 18th of June 2018, so welcome everyone. Today's Monday, first trading day for this week. I hope you all had a spectacular weekend. Today in this session we're going to have a look at the markets, where are they trading right now, what levels to watch out for. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content of this webinar does not constitute investment advice or investment recommendation and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Also, a very quick reminder of our JFD Brokers research page here. So if you go in on our jfdbrokers.com main page and click here on research, it will take you to our little page here, which we update on a daily basis. We throw out different trading shoutouts, different technical analysis, our daily analysis, of course. And while you're here, don't forget to sign up here and register for our strategic report, which we send out every morning. So it's getting prepared right now at this point. And yeah, guys, I think you can find something useful here. So please do not hesitate to visit us. But for now, let's quickly have a look at the markets, and the first one I want to touch on is the S&P. Certainly, I'm continuing to watch this area right here that I was talking about in my previous videos, the 2790 and between the 2790 and the 2800. Certainly, good area to watch. If we suddenly get a nice boost here and we start piercing through these two levels, well, this could open the path towards higher levels, maybe even going towards this 2840 mark. Now just let me quickly adjust that level here, guys. So 2840, very good area to watch. Certainly very good potential area of resistance, but if that doesn't hold, well, it could end up pushing higher here, maybe even towards this 2875 mark, which is marked by the highs here that we had in January this year. So some very good levels to watch here on the upside, but on the downside, if this continues, if this 2790 continues to hold, well, we could end up pushing towards this area right here, this nice area of support at around 2742. That acted as a good level, strong level of resistance in the past, we can see here. And if we start breaking this area, well, I mean, this could open the path towards the lower levels here, right? And the first good one to watch is, of course, the round 2700. So keep an eye on this one, guys. Excuse me for my voice. So the Dow Jones certainly found its support last week on Friday around this area right here at around 25,100. Certainly, let's continue monitoring it today. Let's see what it wants to do with this level. If it continues to break lower and continues to break these EMAs here, well, we could end up moving lower here, maybe even towards this 24,250 mark. Now, very good level to watch. Certainly, it acted as a good area of support in the past, and also we can see that if we get a move here lower and we end up moving towards this 24,250, it could coincide, by the time it gets here, it could coincide with this 200 EMA here, shown as the black line. And of course, you can see in the past that this line has acted as a good area of support, potential area of support. So I mean, for now, guys, just continue observing this one. If suddenly this reverses back to the upside, well, keep a close eye on the 25,450 mark. Now a break above that could open the path towards these higher levels here, and the first good area of resistance we're watching here is the 25,800. Looking at Nasdaq, certainly Nasdaq is performing the best out of all these major U.S. indices, and of course we're seeing that last week, let's say like that, last week we had a nice push here. We hit all-time highs again, and certainly, and this is something to watch out for this week again. If this continues to push higher, certainly keep an eye on it, because we could end up could end up hitting these hitting all-time highs again. But for that, of course, we would need to see a nice break here above the area of 72.90 approximately there in order to kind of consider for her higher levels. But for now, of course, stay sharp here, because we are kind of stuck in this little area here between the all-time high at around 72.91 and of course this area right here at around 72.20, 72.15, I do apologize. Certainly for us to become more bearish on this one, we would need to see a break below this area right here, the 71.80 mark approximately there. This has been marked by this was the high at around March time this year. So if we do get a nice break here and eventually a close below the 71.80, well, this could open the path towards lower levels, and we could end up pushing maybe towards this 71.05 mark, or even actually a test of this 21 EMA could be possible. So for now, guys, stay sharp, keep a close eye on this little range. Let's see where it wants to break out to. Now, probably the most interesting ones that I wanted to touch on is, of course, the commodity market, and the first one I want to look at is the precious metal gold. And certainly Friday we had this massive sell-off here. We moved not only below this upwards moving trend line that I kept talking about for probably about 2 weeks now, we also broke this 1290 level, the very important 1290, and also broke this low that we had here in May, so around the 1282. So basically we broke a lot of key support levels, and now of course you can see that this 1282 continues to hold, continues to act as a good area of resistance today already. So certainly we could end up moving towards this trend line again, and testing that again, like on Friday. And this trend line has been running since July last year, so very good area of support. Certainly let's keep a close eye on it and see if it wants to break or not. But for us to kind of become even more bearish on this one, we would need to see a break not only below this upwards moving trend line, but also below this area right here at around 1274. Good area to watch. Certainly, like I said, if we continue breaking this, well, I mean, this could turn out to be very ugly for the commodity, for the precious metal, sorry, and we could end up moving lower here. Certainly keep a close eye on this. Is the first area of support to watch out for at around 1261 approximately there. So keep a close eye on this one. But if this trend line acts as a good bouncing ground, we get a nice bounce back up and we start breaking the 1282 mark, we could end up testing this 1290 area again. Maybe it will act as a good area of resistance, and of course we'll trade around this area for now probably. But like I said, stay sharp. We could see a bit of a continuation here to the downside. We can start breaking maybe this upwards moving trend line, but until it broke that trend line, well, we're gonna stay neutral here and just continue observing it. Looking at silver, and now silver had even a worse day on Friday, and we can see that looking at the bigger picture here, we can see that the precious metal is within this triangle formation, and certainly we can see that the upper side has been respected again, and we sold off here nicely. We broke the key area that we were watching here, the 17 level. Also, we broke this other key area of support at around 16.60. so certainly now it's looking more bearish than bullish, and we could end up moving lower here, maybe even towards this lower side of the triangle. So keep a close eye on it, guys. I mean, this could play out as a nice trade. Looking at the US oil, and US oil is of course also selling off. We do have some tensions with China, and certainly US and China are having some tensions, and the battle for the around the tariffs, and certainly for now, guys, keep a close eye on this one, because we could see a bit of a continuation here to the downside. If we start breaking this level again, the 64.10, we could end up pushing lower, maybe even towards this lower bound of the Bollinger Band. And also touching this 61.90 area approximately there. So good levels to watch here on the downside. Certainly at the moment this is not looking bullish, and it's more towards the weaker side, so very could play out as an interesting trade here. Now let's touch on a few pairs now quickly, and the euro dollar is well, on Friday we had a bit of a reversal here, and certainly we can see that this upwards moving trend line continues to hold. This upwards moving trend line has been running since around January this last year. Certainly the question here is, of course, are we going to continue testing this one and eventually we'll break it, or is this trend line going to act as a good level of support, and from here we're going to just reverse back to the upside and we'll start aiming higher? So for now we're quite probably more neutral on this one. For us to become more bullish on this one, we would need to see a break not only above this 116.15, 116.500, but also probably a good one to watch here is the 117.250. Certainly this is something for from the longer term perspective, but if we get a nice break above the 116.500, then well, keep a close eye on this 117.250. Could be a good area of resistance initially, and certainly of course if it starts to break, then well, it could push higher, but we'll just evaluate it then. We'll not get ahead of ourselves too much. But on the downside, if we get a close below this upwards moving trend line, well, this could end up looking bad for the euro dollar, and we could maybe see a bit of a move here lower, maybe a test of this 115-100 area that was approximately the lowest point in May here. And if that doesn't hold, well, I mean, this could continue dropping and we could start aiming for the 114.500. So for now, just keep a close eye on this area, guys. Let's see what it wants to do with that. Looking at GBP USD, and GBP USD kind of in a similar situation like the euro dollar, and certainly at the moment it's stuck here between these two key levels here, the 133.440 and the 132.05, which was marked by the lows here of May. So at the moment, of course, certainly just judging by this picture, it's not looking quite promising and it's not really looking quite positive. So I mean, if we do get a break here below the 132.05, well, this could open the path towards this next key area of support at around 130.55. On the upside, we need to see a nice clear break and a close above the 133.40 in order to start considering these levels here that we had, these highs that we had about 2 weeks ago at around 134.70, and if that doesn't hold, well, it could open the path towards higher levels again. But for now, of course, just let's see what it wants to do with these key two levels, the 133.40 on the upside, and on the downside the 132.05. Looking at the USD JPY, and the USD JPY continues to trade within this short-term upwards moving channel. Certainly, of course, we are keeping a close eye on these levels right here. The first one is this key area of support at around 110.250. Now certainly it continue, we can see that it's currently acting as a nice level of support, and it also coincides with this 200 EMA. So probably that's why it becomes a very significant level to watch. Certainly if we get a break below here, we could end up testing this lower side of the rising channel, and if that lower side of the lower bound of the channel doesn't hold, well, I mean, we could start moving lower here, maybe even towards this slightly longer, well, midterm, let's call it midterm upwards moving trend line that's running here from March, and we could end up testing that one, but only if we get a nice break here below this rising channel. On the upside, sorry, certainly until we have broken this bottom side of the channel, we're probably going to remain more bullish than bearish on this one, and especially if we see a nice break here above the 110.800, this could open the path towards these higher levels, slightly higher levels here. The good one to watch initially is the 111.200, and then of course the 111.400. So the 111.400 is marked by it was the highest point here that we had in May, and of course it will coincide with this upper bound of the rising channel. So One last pair that I wanted to touch on is the USD CAD, and you probably have the ones of you who are trading this one, you probably if you're buying it on Thursday and Friday, you're probably just counting your profits right now. And of course, certainly it met its resistance at around this level here, at around 132, 100 approximately there. Now we're seeing a bit of retracement back down. It's almost hitting this area here, the 131,700, and certainly if this continues to drop here a little further, then well, keep a close eye on this area right here at around 131,250, which was the highest point here that we had in March. It could act now as a very good level of support, from which it could bounce off and reverse back to the upside, where we could start aiming for this 132,100 level again, or even maybe towards this upper bound of the channel, of the rising channel that we're seeing here on the bigger picture. So we could end up moving here higher, but only if we get a nice breakup of the 132,100. On the downside, certainly for us to become slightly bearish on this one, probably more in the short-term bearish, then we would need to see a nice break here below the 131,250, and then we could see maybe a move here lower towards this this upwards moving trend line here, upwards moving support line. Let me just quite slightly adjust it. So yep, we could see a nice test of that, but only probably if we start wiping out these levels here, the 131,250, and then eventually maybe the 130,500. Okay guys, so some very good levels to watch here today, and especially for this week. Certainly keep a close eye on all of them, and I hope you have a good trading session today. As always, keep an eye on the price action, and if you want to join me later on in my Traders Tea Time, that's 13:15 GMT, 14:15 British Summer Time. But for now, thank you very much, and bye bye.